We're just going to apologize in advance on that one. The FCC might charge $500. I don't even know what the fine is for an F-bomb.
I don't think it was even on there.
Hopefully not.
We'll edit that out.
Yeah, we'll talk to Savannah, see if she can cut that thing out. But Adam, welcome back. It's another Wednesday. It's 58 degrees here. Thank goodness.
Yo-yo weather.
No crazy storms though. Maybe we're out of this cycle here.
Doubt it.
You doubt it? All right.
I think we're right in the middle of it.
All right. So what do we got? We got April showers, May flowers, May tornadoes, May roofs, and all of that stuff.
Yeah.
What else has been going on?
Well, the industry is getting more and more volatile. So is the stock market. Everything's going crazy right now.
It is.
What's up with rates? Same thing.
Good question. Can we skip?
Okay.
Yeah. I mean, the oil inflation, all of this. I was actually reading an article before we hopped in here, so I'll be the contrarian and I'll say it. We're starting to see the market, the Fed futures market, price in a potential rate hike in the next 12 months.
That would be interesting.
Yeah. There's a lot of static on that. We can go through a deep dive in that at some point when people actually want to care. But other than that, figured it's almost the end of school for a lot of people here.
Yeah.
So maybe we'll talk about summer school for home buyers today.
What's that all about?
Oh, do you know what summer school is?
I did have to go several times.
That's likewise. Very similar to detention, but every day in the summer. But yeah, we want to talk just kind of breaking down a couple key pieces of the mortgage process and buying the whole buying a house process.
Okay.
Because once you get that pre-approval letter, right, you're all excited. I want to go look at a house.
Right.
Well, you just made the team, but maybe you're not getting on the court or the field and all of that. And now all of a sudden, what happens next, right?
So there's levels to pre-approvals. Is that what you're saying?
There is a level to it. Yeah.
Okay.
Like Avicii would say.
Okay, cool.
But yeah, usually, right, we're going to have a conversation. We're going to talk about pre-qualification, if you will. We're going to ask you some qualifying questions, run through that, troubleshoot. And then we want to get to this fully validated pre-approval.
Okay.
Because when I have the full picture, or when a good mortgage originator has the full picture, we are able to give you concrete numbers that you can count on.
Makes sense. So pre-qual, not the same as pre-approval.
Correct.
Okay.
And so we want to get to the fully validated pre-approval so that we can run down every option, every scenario, and out like game plan, right? Like the X's and O's. Hey, if this person's going to blitz here, hey, like we know this green runs this way, so we want to hit above the pin for one time, right?
Right.
Those little strategies are what are going to allow you to succeed in this volatile market.
Awesome. Well, break it down for me, Tone. Capone.
Yeah, we'll do it. All right. So I think one of the things, right, you've transacted on houses before.
Mm-hmm.
Why do we need these documents, right? Like how does the document flow ever stop?
I feel like no, because isn't there like times that it times out? You need so many from certain weeks, but why do we need all the documents?
Great question. So we need all the documents because there's lots of moving pieces, right? You might be you're living life. The mortgage world doesn't have common sense. Like it's a very, very checkbox oriented process, right?
Mm-hmm.
So you have 4 bank accounts, you move money from here to there to here. An underwriter in the loan process, right? It's just they're mitigating risk or reviewing risk. Okay. They want to make sure that you're not hiding something.
Got it.
So you move money from this account to this account. Well, now it opens up a 60-day review of this account.
Yeah. Where's that account from? Why is it being opened?
Yeah. Why are there these large deposits that are not related to your employment in here? Or why is there this loan payment coming out of here that maybe you didn't disclose, right?
Is there criminal activity?
Yeah, there could be some of my. We won't disclose all of that. You know, are you frequently going to a steakhouse in the area? We never know.
Right.
But then, all right, we're under contract. We go through all those documents, then we get to this thing called conditional approval, which is, Adam, we're going to give you this mortgage based on
what you've told
conditions.
us.
Yeah. And then the conditions, right? So I'm going to conditionally give you this mortgage as long as we can close up X, Y, and Z.
So there's still some things that are outstanding, but we're going to give you this approval pending the list of things.
Yeah, and those things are typically, right, if we have a nice quality upfront file, right, so then we can expect the appraisal. And I think we'll have Tony Minadero on next week. We'll talk about appraisals from the real estate side and the mortgage side there. Also important, right? Sometimes you guys on the insurance side are maybe asking for the appraisal or trying to gauge the age of roofs and quality of everything, right?
Yeah.
Title insurance. So title, does the seller own this house? Are there any weird liens? Do you, as the buyer, have any judgments in that county? All kinds of weird stuff, right?
Yeah.
And then like there's the buckling up of like assets too, a little bit, right? You probably gave earnest money.
Yeah.
So we need to source that coming out of the bank statement.
Okay. We got to see where it came from.
Yeah, exactly.
Can't come from your uncle.
It can in some cases.
But if it does, you got to back up that, right?
Yep. We got to have paperwork for that. So yeah, it is a lot of paperwork, right? But that's what happens. And having the strategy and understand, working with a lender that explains why we need it and what happens next is critical. It mitigates stress. Right?
I think a lot of times I found that like when expectations are off and they're like, well, I got you that. But they didn't know that this was an ongoing thing. Like, let's say that the home buying search goes for 3 months. Am I going to have to show that I'm still employed?
Yes.
I'm going to have to show my paychecks again. I'm going to have to show my bank statements. And then if something shows up in there, they might have to pull on those threads a little bit.
Exactly.
And that creates frustration.
It creates friction, frustration, all of that. And I promise you that most mortgage people, we're not here to like deny your loan, right?
Right.
We're here to make sure that when we close this loan, we can deliver it to an aggregator or an agency, and then you're on and off to servicing, right?
Yeah.
So
it has to be compliant.
Yeah, there's a lot of things. It's a lot of money to borrow, right? It's not a credit card.
Right.
But that's where it goes, right? Then we go from conditional approval to clear to close. Clear to close means, hey, we are ready to sign on the dotted line. Now there's a couple other little pieces that you could actually blow up a clear to close too. As a buyer, you could quit your job. We've had that before. You could buy a McLaren. That's happened before.
That's really?
Yeah. Hey, guess what? I got to do $3,000 a month car payment.
Oh, you're not eligible anymore.
That will hurt your debt to income ratio, my friends. And you didn't buy a cool McLaren either.
Oh no.
But that's kind of what goes on through that process. I know sometimes we want to demystify some things there.
That makes sense.
Then after you close, right, now you're going to have your loan transfer, the servicing, plug in, like who are you going to make your payments to? And then the ongoing part, which is a very important thing we should probably talk about today real quick at the end here, is like your escrow and your monthly payments and what happens later on, right? And you deal with this because you guys are handling clients that escrow, so they pay 1/12 of their insurance, their loan servicer, 1/12 of their annual premium to their loan servicer every month.
That's right.
And then the loan servicer cuts you guys the check.
That's right. And people don't really understand that when they go to closing, they're actually paying for that whole first year up front. That doesn't usually compute for people.
The easiest way to explain that part is it priming a well.
Yeah.
Right. So you got to put a little bit of money in there so that, you're covered from May of 26 to May of 27. But what happens in May of 27 when you need to cover to 28, right?
Right. Exactly.
And so that's what escrow is, right? And then your premiums and your taxes can change. But when you are escrowing, right, you guys are going to send the bill to the lender or the servicer, and the client's also going to see a copy of that bill too.
They
right?
are. That also confuses them because they think they should pay it, but it's being paid by Chase or whoever.
Exactly. And the same exact thing happens with real estate taxes.
Right.
And like right now, right, it's May. So everyone in Lake County and most of Indiana received their May and their November tax bills in the mail.
It says, don't pay this.
And then then June and September, right, we're going to start to see like Will County and all the collar counties in Illinois get those bills. So when you get those, it's nothing to panic about. It's a great opportunity to review your policy, your premiums, your taxes. Is there, do we have an exemption fall off? Talk to a mortgage guy, talk to your insurance person, make sure that you're properly covered.
Right.
The last thing I had here in the mortgage or whatever, the summer school class here, another thing that buyers sometimes get confused on, we talk about bundling insurance.
Mm-hmm.
And we're only going to be paying with the escrow account, we're only going to be paying towards homeowners insurance.
That's right.
I think there's some confusion sometimes about like, how does it work with my car? And like, what else goes on there?
Right. So that's a word that people get that kind of screws people up because they think it's all going to be in one bill and that's in my mortgage. Reality is all we're saying is when the more you buy from somewhere, the lower the premiums get, just like when you go to Sam's Club, something like that. So the real estate deal only deals with the real estate, but you're also going to maybe have a car, an umbrella, some life insurance. But if you have it all in one place, all those bills go down. That's the meaning of that word in this case. Does that make sense?
So maybe bundling is not the right word to call it that. Multi-line discount.
Multi-line discount is probably a better way to think about it.
Very technical, but maybe fixes up some confusion there.
Exactly.
All right. What do you think? We passed summer school?
I think we got a C+ at best.
All right. Let's call the teachers. We'll call our
passing
wives.
grade.
Yeah. Hey, C's get degrees. We're going to call our wives. We're going to call our teachers, and we're just going to approve ourselves for golf the rest of the summer. I think at this point.
Yeah, we're ready to rock. We can watch Price is Right, followed by American Ninja Warrior. No, it was American Gladiators that came on after Price is Right when I was in summer. What about you?
I don't think.
And the Bulls usually won a championship too.
Yeah, you can usually catch like some replays on that, or watch the Petrullo band shell there, the Michael Jordan talking about things and Dennis Rodman being all
weird.
Yeah, very, very weird. But hey, summer school's out. Summer school's about to start. If you guys have insurance questions, you can get Adam at adamismyagent.com. You guys get me at applywithjr.com. And that's it. We're out.
I'm done. Cut the show.